When you look at US stocks, you get a picture. When you look at stocks globally, you get a much different picture. There's no way to justify what's happening. It's contrived. It's fake. It's a fraud. Let's just admit that we know what's really going on. Some will simply ride the wave. Some will jump off and hope to find safety elsewhere. Which one are you? You came here for the truth, so let me unveil that for you. Today we are going to look at global stocks versus, that's right, US stocks. Now, we have seen since the financial crisis this big dip downward, and the US stocks have risen to new heights. Everybody knows this, so I wanted to look at this, compare it to global stocks excluding the US. You get a much different picture. Yes, stocks did come down during the financial crisis, but have not been able to surpass their previous highs. This is much, much different. We are seeing that occurring today. Now, are all of the stocks in the US doing well today? No. What we are seeing, in fact, is just a handful of stocks within the US that have risen. The FANG stocks being one very good example. These have risen, bringing the whole market upward and skewing the image that everything is fine. But if you were to exclude, let's say, the top 10 stocks or the top few stocks in each sector, you get a much, much different picture of what's really going on. Globally, the economy is not doing well. You can see that. Yes, there's pockets. There are particular industries that are doing better than others. You can see this in different cities that might be having booming real estate, for example. But when you look at it on a global scale, you get that really deep understanding of how things are doing. And I assure you, it's not good. The prime suspect here is debt. Global debt levels have surged to a record $217 trillion in the first quarter of this year. This is 327% of the world's GDP. Although most people refuse to admit that debt is a real problem, there is a burden created by every single dollar of debt added to any nation, any person, any city, any state. It compounds and gets worse and worse. The consistent argument I hear is that debt owed to ourselves doesn't count. Well, as far as I'm concerned, currency is created by central banks. They are the monetary authority that issues the currency, sets the interest rate, decides what time the sun is going to come up in the morning, and everything else in between. We loan that money from them. We take a loan from them, essentially, paid back at interest. The more money that is created out there, the more central banks will make. However you want to slice it, directly, indirectly, I don't care. I don't look at it like that. The central banks have one weapon, and that is printing money, issuing currency, creating debt, whatever you want to look at it as. I don't really care about that. All I know is that they have all the power, they control everything, and we give them more power every time debt is created. It's their system. They created this system. It's the central bankers. And guess what? The same people that own the banks own the central banks. It's one unit together. I don't care how you look at it. They are the one and the same. Don't be fooled by what you see on TV. Don't be fooled by the economics textbooks and everything else. It's not how it works. It's really not. It's pretty simple. Household net worth as a percentage of disposable income. One of the things that I wanted to talk about here was that while this has risen dramatically recently, once it gets over that 500% mark, we tend to have a recession. In fact, every single time. 1987, 2000, 2007, 2017. Now, surely it can go a lot higher from here, but At least historically, we are witnessing this happening over and over and over again. I thought it was interesting to show you that. What else about incomes? Well, household net worth as a percentage of disposable income versus 25 to 54-year-old annual US population change. I want to note something, then I'll show you the next chart right away. This is declining. Over the years, this has been declining, okay? And then looking at this here, household net worth as a percentage of disposable income versus 15 to 64-year-old annual population change. Again, declining. All I want to say about these two charts is that when people don't have enough money on hand, they stop having babies. That's the way that it seems. A lot of people are just saying, I can't afford this right now. I'm working my you-know-what off to try and pay my bills. I don't have time. I don't have the money to do this. There are other reasons for this, of course. But here we see a direct correlation. So that's all. I'll leave it at that. And evolution of global FMS most crowded trade, okay? We're looking at the Bank of America Merrill Lynch Global Fund Manager Survey. I've shown you these before. There was a period of time a few months ago that it was all long US dollar. That was the trade of the day, and it seemed to be going on for quite a few months there. Then it became long NASDAQ, and just for a short period of time it was long Bitcoin, even though Bitcoin has far surpassed where it is from September and onward. Long NASDAQ seems to be, yet again, the most overcrowded trade. When you look at tech stocks, you're seeing just the most ridiculous valuations that have been given to these companies. It doesn't make sense. A few select companies, of course. All right, then we're looking at the tail risk. What does the market think? The Fed ECB policy mistake right now is the potential worst thing that could happen. And what are they talking about mistakes? They're talking about raising interest rates. They're talking about cutting back on all of this garbage that they've been printing and putting into the system. That's what they're talking about. They're worried, please, central bankers, please don't make a mistake. Please. That's what they're saying. In the next 6 months, the most and least surprising would be, most surprising, whoa, can you believe it? A recession. Wow, I never would have thought of that. And the least surprising, an equity bubble. These go hand in hand, obviously. I mean, what an absolute joke. And this is generally the times when you would see things actually taking place. It's when nobody believes it. That's when it happens. When nobody would have thought, what? I couldn't believe that could have ever have happened. And it happens. That's what happens in all types of things. When people become complacent, they get hit real hard. That's all for this video. If you found it informative, please give me a thumbs up. If you want to support this channel, you can do so by giving me a thumbs up, by commenting, and by joining the nearly 70,000 subscribers. Make sure you hit that subscribe button so you can get on these videos. Many people have reported to me over the years that they have lost their subscription to this channel. So make sure you are subscribed, not just to get the videos, but also to support me as well. So I do appreciate that. And last but not least, if you found this video informative, I know that you will find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. Look in the description below for the links. Take care. I just wanted to throw this in here. Wanted to tell you that at some point I'm thinking of doing very short videos that are available only on Facebook, Twitter, and Instagram, because I can post to one and it will copy to all of those, where I would answer people's questions. So I would take a question, and in 1 minute or less, that is the maximum that it will accept on Instagram, 1 minute or less, I'll respond to your questions. So people are emailing me, people are commenting to me, and I thought, what a good way to get the information to that person as well as to the whole community, that they be able to all learn from that. And of course, I won't mention people's names or anything like that, but I'll just email that person back and just say, I just responded to you via Amazon, Twitter, Facebook. So you could check that out there. I think that'll be a great way to really spread that much information around. I've also heard that it is good for the business aspect of it to sort of spread your wings a little bit and get those other markets out there, because the content that I'm creating for YouTube, which is obviously my primary content, is mirrored to Twitter and Facebook. But supposedly that's a bad idea, because you don't want to put all your eggs into one basket. So you would then create some other things. So I thought this would be a good thing. I don't know if everybody has all of these, but I think that most people out there would be able to have Facebook, Twitter, or Instagram, and they would be able to see the answers to their questions there. Maybe not everybody has that. I'm sure there are ways you don't even need to sign in, and then you'd actually be able to view the videos. So I don't think that would be a problem for most people, even if they didn't have an account. I'm not sure how it all works. But anyway, just wanted to bring that to you. Just some full transparency. Take care.